Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we'll take a look at the Great British Pound because here we see significant upside action, and we should understand in today's update what in fact stands behind this rally. So the point is that we have long-term bearish setup on the Great British Pound, and we should understand whether this upside action is the menace for our bearish context, or we should not worry currently, and this is just the normal bounce, and we could easily trying to take the short position and using this rally for possible as the preparation for a possible short entry. So guys, on the long term, in the two words, on the long term analysis, this recent rally is not hasn't made any significant impact, as we have bearish context on the monthly chart and the weekly chart 2 weeks ago, as we have it right now. So this upward rally is not really significant for monthly and weekly charts trends, as on the monthly and the weekly stands bearish, and this action really doesn't change the situation. Still, we could say that invalidation point for the bearish setup on the high time frame charts stands at this top. For example, if the Great British Pound will continue to move high and taking out of this top, it will erase current bearish setup on the long-term scale. Why? Because in this case, both trends will shift bullish, and market will erase the bearish grabber that we have on the monthly chart. Currently, this bearish grabber stands in the focus of our context, because besides of the bearish trend, we have the pattern that tells us that market should take it out of these lows. That's our long-term analysis on the Great British Pound. And currently, as you can see, this bounce, yes, it's not really small, especially on the daily chart, but at the same time, currently market hasn't broken any red lines of the bearish setup. The final edge is right here, but at this area we also have some sort of the test for the quality of the bearish setup. This area could clarify whether the market is really bearish and the degree of flawless of our bearish setup. Just a bit later you will understand what I'm talking about. Currently on the daily chart we could say that market has shown upward action, reached the monthly pivot resistance one. It's not at ever bought, and daily trend right now stands bullish. And that's also market has hit this resistance and shows some bounce down after this has happened. So guys, since we have the bullish trend on the daily chart, but we have the bearish context on the high time frame charts, you could apply different tactics for taking the short position. You can't, if you trade on the high time frames on the weekly daily time frame pair, you can't take right now the long position because you have the bearish context. So for short entry, you could apply different tactics. They mostly different by the risk degree, but also they are different in an approach to taking the short position. So the first tactics is mostly conservative, and again here we will deal with the John Napoli Minesweeper technique, because for getting the Minesweeper entry, you need first to get shifting trend of the daily chart to the bearish side. So you will plot the MACD predictor. It will show you different level at which the trend will shift bearish, and this will happen somewhere in this area. Of course, when if market will start to move down, the MACD line also will creep higher. Let's suggest that this will be somewhere, maybe it's around 5360 area, somewhere in this area. So, for example, if market will shift trend to the bearish, all three trends will stand in the same direction, monthly, weekly, and daily chart. In this case, you could apply the Minesweeper technique and use this move down, some retracement from it, for taking the short position. So this is the conservative tactics because it assumes the trend shifting. And for example, if market will not give you the trend shift and will just continue move higher, you will not get the entry moment for taking the short position. The aggressive tactics assumes applying different tools for taking the short position, and it's a bit quite different from the Judd Napoli Minesweeper. It suggests that you will rely on some other patterns, but you will get the better entry point and relatively tight stop. So what the technique is? For that purpose, we need to drop to the 4-hour time frame chart. If you take a look at the 4-hour time frame chart carefully, you will see that our market right at the monthly pivot resistance 1 has completed the perfect shape of the ABCD pattern. The result is combining of this pattern with the previous drop down gives us perfect Gartley's 222 sell right at the monthly pivot resistance 1. So what does it mean for us? First of all, monthly pivot resistance 1. We know that until pivot resistance 1 holds the upward action, we should treat this upward action as a retracement. Only if market will pass through it will tell us that this is not a retracement anymore and market could continue move higher. That's why, as I said, this point is another red line for the short-term perspective for the bearish scenario. So if market will move above it, this will mean that upward action is not a retracement, and it will put under question, it will be the hazard for the overall bearish context. Because first of all, market will move above the monthly and weekly pivot resistances. This will be already not the really bullish sign. Second, as soon as market will pass through the 100% extension target of the ABCD, what does it mean? It means that it should go to another target, maybe to the 1618, and that will lead market very close to the stop. And this will be really the hazard for the failing of the bearish setup. That's why this point is very important, and this will be our invalidation point for the current short-term setup. So if we suggest that market is really bearish, it should not continue move high because already it has done everything. So this reaction was the result of completion of this A, B, C, D pattern. It's normal retracement up. Okay, so as this retracement has completed, market should turn to the downside. Retracement has been completed because market has completed this ABCD pattern. So ABC retracement has completed right at the pivot. So all necessary retracement have been done by the bearish market. And if market is really bearish, it should continue move lower. That's the idea of the aggressive tactics. So, and how we will enter? For entry, we will use this move down. As we have suggested, market should not return at the cap and should not move above this top. That will be our invalidation point. That will be an area where our initial stop will be placed. So we will use this moving lower. As you can see, this recent swing. As you can see, market will open very close to the significant support there. This confidence support on the 4-hour time frame chart and weekly and monthly pivots. On the hourly chart, you'll see market has formed butterfly sell right at the ABCD top. That's great. It's moving down. You can see that ultimate target of the butterfly stands at the same area, 54.90. It's the same area as the pivots are stand right now. It means that when market will hit this target, probably some minor retracement will happen. And particularly on this minor retracement, we should take the short position, according to aggressive tactics. At which level we will do this is currently very difficult to say because, for example, if market was to form here the double ripple buy, in this case we could wait for a deeper retracement, for example 50% or 618 level. If we will get the brand bottom, then probably we could watch for first level first resistance, so the 3.8 resistance. If we will get some kind of the ABCD to the upside, in this case we should follow this ABCD to estimate the precise level where we should take the short position. But guys, in the big scale, there's not really a big difference, because you can see between this level and that level just 30 pips difference. It's not really significant. If you even will miss the entry, or you will take the position too early, this will be not really big difference between these levels. But it will be better, of course, if you will try to catch the retracement carefully. Initial stop should be placed here. As soon as market will continue to move lower and confirm its bearishness and move below the weekly pivot points, break this confidence, you will be able to move your stop to the break-even. That's the idea of trading on the Great British Pound right now. So as you can see, these tactics are absolutely different. They provide different degree of the risk, initial risk. They are based on the different patterns. So final choices, of course, stands as usual up to you. So you should think, decide, and follow your personality, your possible risk that you could take. But shortly speaking, the overall setup right now on Great British Pound, as we just have discussed, long-term setup is still bearish. And right now, on the next week, we will understand what market is in reality. So Great British Pound should answer whether it's truly bearish market, or we will see some flaws on this bearish setup, maybe right to its total failure.